let's turn to something else that we are watching that probably Brian Sazi is not a fan of, and that's higher airfares. Although, Sazi, you got to go on vacation to
Not a fan.
experience those higher airfares. But we are seeing those come through, especially with what's going on with fuel prices. Yahoo Finance's Dani Romero has more on this phenomenon. Morning, Dani.
Good morning, Julie. Yeah, there are several things at play right now. Demand for travel is up, prices are up, and also those jet fuel prices are up. So all of that is a domino effect of what's really going on in our current environment right now. And as Russia's invasion of Ukraine prompted the U.S. to ban imports of Russian crude oil, it has pushed oil prices as high as $130 per barrel. That plus the higher demand in travel for trips means brace yourself for some sticker shock when buying those airfare tickets. So experts are warning that you should buy your tickets now because those prices will continue to go up, and they will. During the JP Morgan Industrial Conference with investors, Delta airline officials expressed their optimistic view that the airline could offset higher fuel costs by hiking up those ticket prices. In a note from JP Morgan analysts following the conference said that management is increasingly confident in its ability to pass 100% of higher fuel costs to airfare prices in the second quarter of this year. Management estimates an additional $10 to $15 per ticket to compensate those higher fuel costs and sees no difficulty in accomplishing this. And according to Hopper data, in March, the average airfare ticket from the US to Europe increased by 16% from the prior year. Meanwhile, at this same conference, United Airlines officials also noted that business is booming after the pandemic really wrecked the travel and leisure industry. United Airlines noted that business demand is tracking ahead of expectations, returning to 70% of 2019 levels. They also said that revenue for business travel has 75% recovered, but United is not currently passing on those costs just quite yet, but they believe that they will have no problem to do so. But again, analysts on Wall Street aren't that optimistic. Some at least aren't that optimistic that these airlines will actually be able to accomplish all of this. A couple of analysts at Bank of America said in their note, specifically, they said, this is way ahead of how airlines have been able to price historically. And we think near-term labor issues and pilot pipeline helps keep a lid on capacity. So there are different challenges ahead for this industry, one of them being the pilot shortage as well as the ongoing staffing issues. So all of this is at play right now as, some airlines have also cut routes across the country in late last year. Julie, Brian?
Hey, Dani, I'm curious as we talk about the fuel issue specifically with fuel surcharges. I mean, we always hear that the airlines and a lot of other businesses hedge their stuff way out, right? So they're buying fuel now for whenever it is in the future. So I wonder, it's interesting that they're passing on the cost now and what that implies about maybe they're not hedging enough. I don't know how it all works.
Yeah, I think that's a really good question. I think that also is what the, Bank of America analysts are really pointing to, right? I mean, I think there's a 60 to 90 day point where these airlines are hiking up, where they're supposed to hike up these prices. So again, like, the analyst note said, it's historically, they're seeing it as, before that it's probably too soon that they're hiking up these prices. But yeah, that is a really good question to ask the airlines and something I will definitely be keeping my eye on.
In the meantime, we got to brace ourselves for paying those higher fares. Thank you so much, our Dani Romero.